When we have another disaster, which we will, inflation is going to be here whether we like it or not. We're going to have a huge problem because of the debt. I know that this is going to end badly. Jack, the debt has never, ever been this high in American history, probably world history. It has to end badly.
I am very pleased and honored to welcome to Monetary Matters Jim Rogers, renowned investor with a wealth of experience. Jim, it is great to meet you. I am really glad you are here. How are you doing today?
I'm fine, Jack. I'm delighted to be here. And I guess when you say I have a wealth of experience, you're saying I'm old. But considering the alternative, I'm glad to be old.
I'm saying that you have a lot of experience and you have gained a lot of wisdom from being in the markets. Is it true you started on Wall Street in 1964?
More or less, yes. I've made many mistakes. I've been around long enough to make every mistake you can imagine.
What are the types of mistakes that various investors can make, and are there better mistakes to make than others?
The best mistakes are the ones you make early, so you can learn from them. My best mistakes were early, and it was mainly because I thought everybody knew what I knew, but then I found out, oh, a lot of people didn't know what I knew, and so that made me worse because I assumed they knew what I knew. When I found out they didn't, I lost more money.
Jim, what was Wall Street like in the 1960s?
Oh, you can't imagine. If I told you everything was on paper, you know about the NASDAQ, in those days it was over-the-counter market. And every day a delivery boy would bring you big, thick things of paper that had all the market makers on it and the prices, the bid and ask. There was no such thing as a computer and looking it up at this and that. You would go to they were called pink sheets. They were called pink sheets because they were pink. And they had all the market makers and all the companies and all the prices. And if there was a question, you went to the pink sheets. We don't have pink sheets anymore.
The 60s was a bull market and the 70s was a bear market. What was different about a bear market than a bull market?
Well, it depends on which side you're on, but you can make money on both markets if you get it right. But the problem is, of course, getting it right. You can lose money in both markets too. No, in my early days, I made a lot of money compared to other. I mean, a lot of money. I didn't have much, but percentage-wise, compared to everybody else, because I knew. I knew what was going on, and it happened, and I made a lot of money, and I thought I was smart. And then the market showed me I wasn't very smart. There was a lot I didn't know.
And when you were making a lot of money, when the market wasn't making a lot of money, was that the 1970s?
That originally was the 60s, I guess.
I believe, correct me if I'm wrong, the broad indices continued to rise in the late 60s. So the market was making money. You were making more money than the market in percentage terms. What were you doing that was beating the market, and why?
Well, my first experience, I shorted the market. I bought puts at a time when everybody else was buying stocks. The markets collapsed. I made a lot of money because I had all these puts. I thought I was smart. I thought it was very easy. I sold my puts and I actually then went short after the market rallied because I knew it was going to go down again. Lo and behold, I got wiped out because, yes, the market kept going up. Eventually, it went down. Eventually, all those stocks went bankrupt that I shorted. Didn't do any good. I lost everything first.
I would never compare myself to you, but I have lost money shorting companies that have subsequently gone bankrupt. So
Mm.
being right is not enough.
Well, what I didn't know about in those days, I didn't know that everybody else had different views and different knowledge or different decisions. And that was part of the market I didn't understand. But there were a lot of people who didn't know what I knew, or if they did, they misinterpreted it. And so I lost everything. The only good news is I learned from it.
That's how you learn, is by losing, right?
Yeah, well, it's better not to learn from mistakes, but I learn more from my mistakes than from my triumphs.
And is it fair to say, Jim, that you and your then business partner George Soros had a lot of triumphs in the 1970s when commodity prices went up? The performance then is very well known and very good. What was it about the 1970s that your investment style did did very well.
It certainly wasn't just commodities. No, not by any stretch of the imagination. But we both loved what we were doing. We both spent a lot of time doing research and finding out about companies, countries, currencies, the whole works. And we got it right occasionally. So we made some money.
Hmm. As you say, it certainly wasn't just commodities. So in the 1970s, stocks went down, commodities went up, interest rates went up, which means bond yields, the bond prices went down. What were some of the great trades?
Well, in every market, there are ways to make money and ways to lose money. Many ways to make and lose money, usually. Uh, I guess one of the things, it's a long time ago, one of the things was defense. I noticed that the Israeli Air Force was getting shot out of the sky by the Egyptians, which was a little bit absurd. How could the Egyptians do better than the Israeli Air Force? But then I did some research and I found out it was because electronic warfare was coming into its own and the Egyptians were ahead of the Israelis. That meant that the Russians were ahead of the Americans. So I went down to the Pentagon, and the Pentagon said, yeah, we're spending a lot of money now on electronic warfare because we have to. So I did some research and found all the American electronic warfare companies and made a little money. I got it right.
Jim, is there any thing that we can learn from you about? I imagine before this, you probably were not an expert in defense technology, but there was this new technology. Not a lot of people knew it. How can investors who are, but may pray themselves not technologists, grapple with and attempt to understand new technology? For example, artificial intelligence. I imagine a lot of people on Wall Street are not experts in artificial intelligence, but they would like to try and learn. What can they learn? What can we learn from you about how you grappled with this new technology in the 1970s?
Well, my first advice is please don't listen to other people. Do your own research if you want to be a success, because that's the only way you're going to be successful. If you listen to Joe and stocks go up, you don't know what to do because you don't know why you bought them. Or if Joe says they're going to, and Joe says they go down and they go down, you don't know what to do because you don't know why you sold them in the first place. So the main lesson for me is do your own research, know what you are doing before you invest. If you don't know, please don't invest. It's very simple. When you know a lot about something, and everybody knows a lot about something, whether it's cars or fashion or whatever, when you know a lot about something, that's when you can invest. You know, if I tell you you're only going to have 25 investments in your life, you'll be very careful. You won't be jumping in and out. You won't be listening to hot tips. You'll be very, very careful and you'll probably be successful.
That's good. Yes. Don't listen to tips. That's a good piece of advice.
Hot tips can ruin you fast.
What are some other types of mistakes that investors can make? Perhaps you've made them yourself, or you've seen other investors make.
The main mistake that I, and I guess everybody else makes, is you invest without knowing what you're doing. You think you know, but the market will tell you. If you haven't done enough research, the market will let you know very quickly. You don't know what you're doing, boy. You just made another mistake. The market will tell you quickly. Again, I don't know how to emphasize it enough. You just should not invest unless you yourself know a lot about whatever it is you're investing in. And if you find something that's cheap, where there's dramatic change taking place and you know it's taking place, don't call your friends. Do your research and invest.
And Jim, how do you know? How do people know if they've studied a subject, they're forming a view on the market, the market is reacting a different way? Should they have confidence in their own analysis, or do they actually are they a patsy at the table and they should not be involved? How can investors accurately assess their own understanding and sophistication?
Well, some people I know use stop losses. You know, they say if something goes against them by 12%, whatever the number is, they close their position. Many times I wish I had done that. It would have saved me some money. But everybody has to find their own way. Uh, we do need a way to close a position if it's gone against us, if we're wrong. Now the problem is, how do you know you're wrong? The market may be telling you you're wrong, But the market makes mistakes too, I have learned. My gosh, the market makes mistakes. That's why some people can make money in the market when they figure out that the market is wrong. But I don't know how to tell you. As I say, some people use stop losses. They immediately close the position if it goes against them by a lot. But if you know the magic answer, don't tell people on the show. Send me a private email because we're all still looking for that magic answer.
Jim, you said, my gosh, the market can make mistakes. What are some glaring examples from your career where the market has been horribly, horribly wrong, whether it's from 40 years ago or 40 days ago, and in any
Well,
market, stocks, bonds, commodities?
since we were talking about previous markets, in the 70s, there was something called a Nifty 50 or something. There were 50 stocks that went up every day. They were never wrong. I mean, JP Morgan couldn't buy enough of them every day. And not just JP Morgan, but many people with a lot of money. And everybody knew that those stocks could never go down. Those companies were magnificent companies, the 50 of them, and everybody knew it. So everybody bought them every day. We started shorting them, and at first it was very painful, but eventually they all collapsed. But it was painful for a while because JP Morgan certainly had a lot more money than most of us and they could continue buying because they were convinced, and their portfolio managers and head of research, etc., all knew that Avon products would go up forever. It could never go down. Avon Products was a major cosmetics company at the time. And everybody loved it. But eventually they all collapsed, and we had a great bear market in the 70s, partly because the Nifty 50 collapsed eventually. But if you were short them, it hurt for a while.
The Nifty 50 collapsed in the 1970s. Jim, I'm going to share my understanding. Correct me if I'm wrong. That the reason the Nifty 50 collapsed, I'm reading companies PepsiCo, Pfizer, McDonald's, Johnson and Johnson, Eli Lilly, Dow Chemical, Coca-Cola. Many of these companies are very high quality companies that are still with us today and have been very successful. So, is it fair to say that the reason the Nifty 50 collapsed is it's not that the market was wrong, that these were very high quality companies, as people would say in the market today, compounders, serial compounders. It's that they were overvalued, and that in the 1970s, there was a huge inflationary boom that drove commodity prices higher and interest rates higher, and the valuations collapsed. So it's not that the market wasn't wrong that they were high quality companies. They were just valuing them far too richly. Is that fair to say?
Well, yes, that's the answer, the simple answer, but the answer. These stocks just got so unbelievably expensive because there were most of the institutions had to buy them. They thought they had to buy them. They had to own lots of them. So all the institutions bought the Nifty 50. They got to unbelievably high valuations. And no matter who you are, if you get too high a valuation, you're eventually going to go down and you might even collapse. And that's what happened to the Nifty 50.
And Jim, do you think that the same is going on in U.S. markets today? I mean, I will say some tickers, like for example, Fair Isaacs, FICO, a wonderful high quality company. I think that the price to earnings ratio is literally over 100.
Well, I guess we should ask monetary matters. You know, yes, but just to repeat, just because the stock is wildly overpriced doesn't mean it's going to go down. I have certainly learned that in my day, shorting overpriced stocks. Something has to happen. Something has to trigger a change. And that could be many things. And that's true on the downside as well as the upside. You have to find a trigger, something which causes the change, whether it's a high price stock or a low price stock. And if you know companies that are wildly overpriced, I leave it to you. But be careful because stocks that are overpriced can get more overpriced. And
Stocks
stocks
that
that are stocks that are undervalued can get more undervalued too. It goes both ways.
When you say stocks that are undervalued can get more undervalued, Jim, I can't help but think of China, which had been in a very brutal bear market over the past 3 years. Share prices have surged over the past month. You have been no stranger to investing in China. What is your current read on the situation, the Chinese economy, and the markets?
Well, I own Chinese shares. China is one of the few places where I still own shares, and I own them because they got so cheap. I actually been buying Chinese shares for many years, never sold any. They got extremely cheap because of the virus and a property bubble that popped. I mean, they got hit by two things: a huge property bubble that popped, and the virus. So those two things together killed the market when nearly every other market in the world was going up and being strong. Most markets in the world were making all-time highs, while China was going down and being a very bad place to invest. I didn't sell my Chinese shares. Now they're all going through the roof again because the government in Beijing has been doing things to help people, to encourage people to invest. Hooray! I don't know how long it will last, but at the moment, I'm happy about it.
You said Chinese shares are going through the roof. They certainly have exploded over the past month. Does this to you smell like the beginning of a bull move or just an explosive move upside in a continued bear market?
Look at America. America's been around 200 or 300 years, and we've had some huge bull markets. You look at the 20th century, there were times when American shares were disasters, but there were also times when American shares were wonderful, wonderful places to be, and most of them went up a lot. So, I mean, this happens all the time throughout history. You pick any country and you can find a time when shares were wildly overpriced and a time when they were wildly underpriced. It's not just China. I mean, we've all learned how to do this, whether it's England, America, whoever it is. And at the moment, for whatever reason, the Chinese stock market is going through the roof. Well, the main reason is that Beijing, the government, has given lots of incentives to make people buy stocks. You've been around, I'm sure, long enough to know them. Whenever governments do, whenever governments throw a lot of money at the market, it usually works. Whether they throw the money themselves or they encourage other people to throw the money, I mean, this is not my first rodeo. I've seen this happen before, and it usually works.
So, Jim, is it fair to say that you have been quite constructive on Chinese shares and you continue to be constructive on Chinese shares among during this bull move?
I own Chinese shares. I haven't sold any, and I will tell you that if you had bought American shares in 1924, there would have been some huge up moves and some huge down moves. But if you still owned your American shares that you bought in 1924, your kids would love you. Your
Yes.
family would love you.
And do you think that in 21, 24, 100 years from now, investors, people, the descendants of people who own Chinese shares now will love their ancestors?
Absolutely, absolutely. China will certainly have problems, just as America had many problems in the 100 years. It's the way the world works, but I don't see any other. I mean, I know China will have problems. They have some now, but I still expect China 100 years from now to be a wonderful place to have bought shares now.
Mm. And Jim, so I think there are two problems or two critiques that investors have on China. The first is purely macroeconomic. They don't think the cash flows will grow. They don't believe in the economic model. They think the real estate bust will cause mass deflation and a really bad economy. And the second is almost entirely political. They say you can't invest in a communist country, and shareholders themselves are at risk in the same way shareholders, were wiped out during the Russian Revolution of 1917. On that latter risk, what is your view that you think, okay, maybe that is a risk, but that is a small risk and that's overblown. And anytime the market is overweighting a risk, that's actually an opportunity.
Both of those views have some validity, there's no question, and some will be correct at various times in your lifetime and mine. They have been. But again, I mean, everybody in the world has been through this. Japan has been a gigantically successful stock market since the Second World War, but there were times when nobody would think about buying Japan. There was a time in 1966, in fact, when the whole Japanese market collapsed. All the brokers were bankrupt. Tokyo had to bail them all out. Well, okay, if you had invested in Japan during that disaster, your kids would love you. Everybody would love you. Your family would love you. Your girlfriend, if you have one. If you don't have a girlfriend, you'll get one. If you had bought Japanese stocks in that gigantic disaster. So I hope I don't need to tell people that disasters and bear markets are normal, recurring, always happen, and always will happen. And usually, if you can figure it out, it will be an opportunity.
Jim, over the course of your life and career, I think it's safe to say, at least in the US, that bull markets have become more frequent and bear markets have become less frequent. I, as someone who's born in the 1990s, over my lifetime, bear markets were far less frequent than from when you were growing up. Do you think that that was purely random, or that that is a continuing trend, and that the markets have been quote unquote de-risked? Although I warn people, whenever someone says an asset is de-risked, it's not de-risked.
Close the door and sell. You know, close the door and go to the beach. Part of the problem is that, like it or not, the American Central Bank, in the years you're talking about, have learned to print money and spend money. And I mean, if you ask me, is it good? I would say, no, it's not good. But they don't care. They care about their jobs. They know how to keep their jobs. And the way to keep their job is to print money. Now, this is not 100 years ago, it was been unheard of for central banks everywhere to print a lot of money. But in the US, in the years you're talking about, that's what they know. And they know how to keep their jobs. Uh, 200 years ago, or even 100 years ago, the idea that central banks would just print a lot of money would have been unheard of, politically, economically, morally, in every way. They just would not have done it. Now, that's what they learn in school. Learn how to print money if you want to keep your job.
Do you think that that will continue? For example, that there were things the Federal Reserve did in 2008 that were unprecedented, but then in the next crisis in March 2020, the Federal Reserve did even more things that they didn't even do in 2008. Do you think in the next crisis the Federal Reserve will do even more unprecedented actions, and that at each subsequent crisis it is an opportunity to push the envelope even further and maybe do what Japan did by the central bank buying equities?
Well, I know that all of these guys go to fancy Ivy League schools. The Secretary of the Treasury has degrees from two fancy Ivy League schools, and they all are taught that what they're doing is okay. They're taught theories that they say are okay and that they should maintain and pursue, and they will. Yes, they will. That's what they know. They all know Mr. Keynes now, but no, all these central bankers go to the same schools, the same meetings, they talk the same thing, and they all know how to print money, and they know that printing money is good. They say it's good. So it doesn't matter what I say. They are taught and they believe that printing money is good. I can tell them no. They don't care what I say. They're going to print money. So it's not over yet. Now, the real answer to your question is if and when we have another disaster, which we will, the debt in the US is beyond comprehension now. So the US, unfortunately, we're going to have a huge problem because of the debt. The numbers are just, I cannot believe that the people in Washington can't add and subtract. You don't have to add much to know it's a disaster, but they don't care. And just look at the numbers. I know that this is going to end badly. And when it ends badly, of course, it's going to be repercussions, and many people will change. Congressmen will lose their jobs, but other congressmen will gain their jobs because they're going to say X, Y, and Z, and they might be right. And so, Jack, the debt has never, ever been this high in American history, probably world history. So it has to end badly. Now, if you go to Princeton and get a PhD in economics, they will say, no, you're wrong. We have the solution. We have learned the answers. Well, hooray.
Mm.
Maybe you should transfer to Columbia instead of Princeton.
Just for the sake of argument, couldn't we say that for since the 1980s, when a lot of people who are on Wall Street, they entered Wall Street at 1980s or later, you entered it before Wall Street, as we've covered it in the 1960s. So you saw the big bond bear market. But most people alive who are working on Wall Street today have never lived through a secular bond bear market. Their entire lives, their entire careers, the debt has exploded. And when you think the debt explodes, there's more treasury bonds. So the supply goes up. And if demand stays constant, prices should go down, which means yields should go up. But bond prices have gone up as debt has gone up and yields have gone down. So why can't this continue? And there have been academic papers from many well respected economists over the past 20 years predicting once we hit 90% debt to GDP, once we hit 100% debt to GDP, this is all going to blow up. I believe now we're at 125% debt to GDP. And the stock market's at an all-time high. So how do you know at what level this is finally going to burst?
Ah, you're asking for a hot tip. I wish I knew the answer to that question. We would all be rich uh, if we could answer that question. The debt in the U.S. as a percentage of anything is at an all-time high, and bonds have been going up for 40 years. I'm just telling you what has happened before. Now you can say, like Janet Yellen will say, don't worry, we've solved the problem. We figured it all out. And she's got 2 Ivy League degrees. So maybe they have figured it out. It's never been figured out in history. I am skeptical because I know it is never. No government has ever figured it out. No government has ever gotten it right. So we will see. But I'm skeptical.
Jim, I imagine the consequences of large amounts of government debt. I can imagine three different scenarios, three different consequences. One, much higher bond yield, so much lower bond prices. A weaker currency, so in this case, a weaker US dollar against other foreign currencies. And then three is inflation, which is basically a weaker currency against real assets. Which of those three, or all, or both, do you think will be consequences of the large amount of US debt?
Well, history would say that all of them will occur. Uh, Again, Washington says, no, don't worry. We solved the problem. But no country has ever been so deeply in debt, and the debt goes up every day, every week. It's astonishing. And history shows that countries that get into this situation eventually have a problem. Washington says, no, we won't. We've solved the problem. I am skeptical because I've read enough history to know that this has always led to a problem eventually. But, Jack, they say we're not going to have any more bear markets. Hooray! Hooray! Now, I know that there's never been a country in the world that's never had a bear market. There's never been an era in history that had never had bear markets. But maybe it's right. Maybe we should all move to Washington, borrow money, and happy days are here again.
Jim, when you say you've read throughout economic history, you know that all of these things do end badly. Which periods of history are you thinking of?
You pick it anytime. Anytime. In the 20s, they were convinced we never have a problem again. And they didn't for 10 years. But then we had the worst bear market we had had in American history. Many people, but that happened in the world too. You know, the Germans, the British were wildly successful, but they collapsed. Germany was collapsed. This led to the Second World War. All of these people who had great success and solved the problems of the economic world lived to pay the price. I don't know any period in history that hasn't eventually had a problem. If you do, hooray. Let's go back and live then. But I don't know any.
Jim, I'll just make a counterpoint to that and tell me where you disagree. That in the 1920s, all of the debt was denominated in gold and it needed to be paid back in gold. And there wasn't enough gold and there was a huge debt bubble. We may now have a debt bubble now, but it is denominated in dollars. And the federal government and the Federal Reserve is in charge of the dollars. They can print the dollars. They don't need there to find new gold in South Africa to bail them out. They can find the gold, i.e., dollars, in their own vaults because they print them. All they need is paper, Jim. All they need is paper and ink. What do you make about that?
Jack, you've solved the world's problems. You should start selling printing presses. I mean, for goodness sakes, now we know how to solve the problems and never have a problem again. Just keep printing. I mean, there have been periods in history when people just printed and printed and printed. None of them ever were long term successful. But Jack, hooray! Let's do it. Send a letter to your congressman. Send a letter to the Federal Reserve. Send them some paper so they can just keep printing. Oh my gosh, it's wonderful. The world has no more problems. Jack has solved the world's problems.
Yes, I definitely have not solved the world problems. Jim, I do think that there some people say the U.S. is so fiscally irresponsible. Look how much debt the U.S. has, whereas China doesn't have that much debt, and that's true on a government level. But when you look at the banking system, the U.S. actually is far has less debt than the Chinese. There's the private debt, and then there's the public debt, and the Chinese banking system has an enormous amount of debt, many of which are real estate loans, which are now falling in value. You do have to look at both, right?
Most countries in the world, I know of very few countries in the world now, maybe North Korea. I don't think anybody will lend to North Korea. But most countries in the world have built up a lot of debt. 30 years ago, China didn't have any debt, or had very little debt, but now China has a lot of debt. So I don't know who's going to bail us out, Jack. Maybe you know somebody, but nearly everybody now has a lot of debt, and nearly everybody is getting more debt. So it's wonderful. The Secretary of the Treasury says, don't worry, we've solved the problem. See? All you need to do now is go back to university and get another PhD. Just write a thesis about printing money. You'll get 2 or 3 PhDs. The best solution, of course, Jack, that I've read is just don't have the debt in the first place. Don't have the gigantic debt ratios in the first place. There are not many. North Korea comes to mind, but there are not many that I can think of. Even China, as I said, 30 years ago, China had very little debt. Now China has a huge amount of debt and a big ratio. I don't know anybody that doesn't now. I mean, look at Japan. I cannot believe how much debt the Japanese have taken on. It has been a very successful country, but unless something changes, they're going to have a gigantic problem in 2 or 3 decades. The Japanese population has been declining for 15 years. That's not a typo. 15 years. The Japanese population is declining, and the debt skyrockets. Now, I love Japan. It's a fantastic country in many ways, but I can read, I can add, I can subtract. I know it's going to end badly. Has to.
And Jim, Japan was in a massive bull market in the 1980s, so much so that Japanese money was buying golf courses, buying everything in the United States, and the bubble popped in 1991, and Japan was in a brutal multi-decade bear market from which it is now emerging, and the Japanese stock market is now doing quite well. What was your views or your experience like during the Japanese bubble years of the 1980s? And what was it like to witness the implosion of the bubble?
Well, the Japanese bear market lasted 35 years. There have been very few times in history that a major country, has had a 35-year bear market. That's not a typo, 35 years. And the Japanese did everything they could to stop the bear market. They printed money, they did everything they could. But, Jack, it's hard to tell the market you don't know what you're doing. Because if you're making basic fundamental economic decisions that are wrong, the market's going to say, we don't care. We don't care if you went to Princeton. We don't care. What you're saying is wrong, and the bear market's going to take its toll. Now, Japan recently, in the last year, has started spending and printing and borrowing huge amounts of money. The population's been declining, so the more they spend, the more effective it is. Can it last? I will tell you no. The Bank of Japan says I'm wrong. Bank of Japan says don't worry. So figure it out. You know, I'm convinced the Bank of Japan is going to pay a very serious price someday. They're not. They don't agree.
Jim, how do you handle having macroeconomic views where you don't put them into action because you know that the bubble can always continue. For example, people have been doubting the Bank of Japan's ability to keep the wheels spinning, the plate spinning for 20 years, right? So do you have a bucket that you put? Okay, these are my market views, but I'm not going to make investment decisions on this because all these people who went to Princeton and Harvard and Yale, which I believe you went to, are going to keep printing money. And even though I have these views, I don't want to lose money by betting against the tide.
Well, one does have to be realistic because the Bank of Japan, all these central banks have huge amounts of money, and there's some countries that don't have huge debt right now. So economic forces can be overridden for a while, if you will. You look at what's happened in Japan. I mean, the Japanese had a bear market for 35 years. Now things are going through the roof. Whether they're going to come out okay in 25 years, I don't know. I doubt it. But it can happen if you have enough money. I mean, if you're the Federal Reserve and you have unlimited money, you can be okay for a while. Your views can be accurate for a while. But maybe I'm wrong. Maybe history's different now. Maybe the world has changed. Maybe it is different this it's different this time. But Jack, I'm not the first person to tell you that those are very dangerous words.
Mhm.
When somebody says to you it's different this time, be very worried. Double check, triple check, quadruple check, because even if it's different this time for a while, it ain't ever this different this time.
Jim, what's your view on commodities right now?
Well, I mean, there are many different commodities. You mean sugar or you mean silver? There are many different, or oil, natural gas. There are many different commodities, and each of them at times has bull markets and at times has bear markets. Often they move together. Agriculture, for obvious reasons, would often move somewhat together because it all depends on rain and a few things like that. So I don't have an answer. I wish I was smart enough to have a blanket answer about commodities. I own silver. I own gold. I'm not buying gold. It's at an all-time high, but I might buy some more silver before long. But that's correct of everything. I own some oil, but I'm not buying oil right now. Oil's been hot for several months. It depends. When you say commodities, I wish I were smart enough to have a simple answer.
Jim, can you talk about some intricacies of investing in commodities that people who are not very familiar with it might not be aware of? So, for example, oh, I think natural gas is going to go up. I think it's going to go down. That's you have your view, but for example, you can earn yield on your if the curve is in backwardation, and versus you have to pay yield if the curve is in contango, as it frequently is. So even if you think the price of natural gas is at $2.50 and you think it's going to go to $3, if the market's price for it to go to $3.50, you're going to lose money. So that's I just one detail, but you can expand on that or just other intricacies that I might not be familiar with of investing in commodities.
I've lost money in a lot of things in my career. The answer to your question is make sure you know what you're doing. Yes, there have been times when sugar, for instance, I mean, sugar sold at less than 5 cents, less than 3 cents at one time. But then sugar went to 66 cents. That's not a typo. And of course, everybody would say, how could that happen? How could something go from 3 cents to 66 cents? One simple thing like sugar. It did. Look it up if you want to. So these things can happen. These things have happened. Avon Products was a gigantic, successful company back in the Nifty 50 a few decades ago. And you look back at those charts and you say, how could that happen? How could that possibly happen? The answer is it did happen. And if you're going to be an investor, I suggest you learn how it happened and why it happened, because it's going to happen again. I'm not saying sugar is going to 66 cents again, but I'm just saying that sort of thing has frequently happened in markets everywhere in the world, and they will happen many times.
Mm.
Jack, I wish this were easy. Wouldn't it be wonderful if this were an easy way to make a living? You look at the TV, it looks very, very easy.
Yes, it is. It is not easy, and I appreciate you telling me and our viewers that it isn't easy because it isn't. I looked at the price of sugar, and the real spike it had is in the 1980, and then I also looked at the price of silver, which you mentioned. The real spike was in 1980. So I guess my question for you, Jim, is what was going on in 1980, and what was in the water then?
There was a guy named H.L. Hunt that in the 50s was known as the richest person in the world. He was a Texas oil man. Turns out H.L. Hunt had three wives. Nobody knew it until he died. And then he had three wives, which they all had children. So I think H.L. Hunt had something like 15 children in the end, which only came out once he died and everybody knew him. But H.L. Hunt had a couple of kids, smart, very, very fundamentalist religious Christians. And according to them, the Hunt brothers, the Bible said that silver and gold should be in a ratio of 16 to 1, that gold should be 16 times the price of silver. So they saw it. They saw that they could add, and they got out the calculators. So they started buying silver, and they didn't stop. And they had unbelievable assets. Now, eventually, everybody, the people in Chicago and everywhere, started noticing, my God, look what's happening to the price of silver. Many people jumped on, but silver went to $50, 50 US dollars an ounce. That's not a typo. But that was because the Hunt brothers kept buying, because their Bible said gold and silver should be 16 to 1. Well, I mean, they were devout Christians, so they knew it should be. And they had enough money to buy and buy and buy. So silver went to $50 an ounce. Eventually, Chicago, I mean, the exchange looks after themselves, so the members said, we got to do something. So the exchange raised margin requirements dramatically. And so the Hunt brothers, even the Hunt brothers, eventually ran out of assets to keep buying silver. And so when the Hunt brothers couldn't meet the margin call, silver collapsed. It was no longer $50 an ounce, no matter what the Bible said. So that's what happened. Silver went to $50 in 1980, 79, 80, whatever it was. Silver's been $50 again once, but I suspect that we will see very, very high price silver again someday. I'm long silver, but I'm not buying it on unlimited margin like the Hunt brothers were.
Why do you think the price will go up? Why do you like silver?
Well, mainly because the world has printed staggering amounts of money in the last few years, and inflation is going to be here whether we like it or not. And silver traditionally has been a way to protect yourself or to help yourself when inflation is rampant. And I know what's happened to the U.S. debt. The government debt is at numbers where it's never been. No country's ever had such numbers. So I know that Washington is going to print more money eventually. Not just Washington, everybody. And maybe you could try other things, and not just silver in the world, but that is a way that has historically been a good way to help yourself and protect yourself. I got some silver here in the drawer. See, there's some silver. So be sure you find some silver if you ask me to protect yourself from future
And so, Jim,
inflation.
that silver coin you just showed us, that was not bought on margin.
No, no, no. In fact, this is actually a North Korean silver coin. And the reason I have it, well, in my view, North Korea is going to disappear someday. And when it does, North Korean coins, silver and gold coins, are going to be very valuable. The silver alone is your downside with North Korean coins. The upside is North Korea is going to disappear someday. I'm not suggesting people go out and buy North Korean anything. I'm just giving you an example.
And so, Jim, you talked about inflation. Inflation peaked in the United States at 9%, and it has fallen sharply to about 2.7, 2.8%. 2.8% inflation is still above the Federal Reserve's target. Do you think the Federal Reserve will be successful in getting inflation down to 2% or even below it? Or do you think inflation has bottomed and it's going back higher?
Jack, don't you listen to the news? The Federal Reserve tells you they have solved the problem. Do not worry. And so nobody should worry if you listen to the Federal Reserve. Um, my view is the debt in the U.S. keeps going up by astonishing amounts, and we're eventually going to have to pay the price. Countries always have. The debt is higher and higher. The money printing is higher and higher. That's always led to problems eventually. Again, the Federal Reserve says, don't worry, don't worry. We've solved the problem now. We know what we're doing. So if you believe the Federal Reserve and they all have PhDs from fancy Ivy League universities, don't worry.
Right? But you don't believe the PhDs.
I don't have a PhD, so I'm not obviously not capable or knowledgeable enough to know what I'm talking about. I've just read about what's happened to every country in history that has done this sort of thing. Eventually, they've had currency problems and inflation problems.
And so when you have inflation prices, commodity prices go up during the 1970s. Uh, do you think that commodities will do better against stocks over the next decade, or at least they will underperform stocks less than they have over the previous decade?
Yes, that is my view, but with anything, you have to buy individual, whatever it is, stocks, bonds, currencies, commodities. Yes, but if I sat here and said to you, we're going to have more inflation and commodities are going to be a good place to be careful. Be extremely careful because markets are not that simple. Wouldn't it be wonderful if they were?
Right. And Jim, going back to your point you made earlier in the conversation, let's say you're right. Let's say the price of silver goes to $80. Someone watching this now, silver is at $35 or something like that. They buy it at 35, it goes to 80, and then they get super even more bullish on 80, and then it crashes and they'll lose even more money. Or they might short it, it goes to 65, they sell it all at 65, then it goes to 100, they short it at 100, it goes to 150, and they lose all their money. So people have to have their own view and have their own analysis. And even if you're right, it doesn't mean that people will make money or be successful by following your advice, even if you're right.
Jack, wouldn't it be easy? Wouldn't it be so easy if we could just watch some guy on TV and know what to do? Oh my gosh. Heaven, heaven. Tell me who he is. Tell me where I can watch him.
Yes. So, Jim, I imagine that you're not terribly constructive or bullish on any currency against commodities, but you can be bullish on currencies against each other. In other words, one currency will just perform worse than the other, so you want to be bullish on the other one. Are you particularly bullish or bearish on any currencies, the euro, the yen, the dollar, or any other you wish to
Well,
name?
I own a lot of US dollars. You would probably say, why, if the US has this staggering debt? And it's because the reason I own dollars is because when problems come, and they will come again, we're overdue, the world is overdue, many people will revert to a safe haven, and many people in the world think the US dollar is a safe haven. It's not, but for historic reasons, people think it is. So I own a lot of US dollars. My plan, my hope, I should say, is that when the US dollar goes up in the turmoil, I will be smart enough to sell my US dollars. Jack, what you should now say is, where would you put the money? And I don't have an answer. That's a problem for me. I have not figured out what is going to be the new competitor to the US dollar. And I don't know. I look for it every day.
Yes, and there are a few books behind me about written by PhD, very smart economists who were writing in 2010 about successors to the dollar. We are 14 years later. It hasn't happened. And Jim, I'm so glad you said that because that is exactly what I meant about you have a view, but it's not a marketable view. You have a view that you doubt the ability of the dollar, but you like to make money and you know that the dollar will perform well if there's a crisis because it is a safe haven even if you don't think it is a safe haven. Jim, could I ask you which countries do you own the most shares of? I imagine China is up there, but what's kind of the ranking? And of course, with the disclaimer that people listening to this shouldn't go out and do everything that Jim Rogers does because Jim Rogers is a investment legend, which you are an investment legend. but what's your kind of weighting?
I guess the largest, China, maybe Uzbekistan. Those are countries where I have a lot of shares. I mean, but neither one of them is overwhelming. I
Mhm.
have a lot of US dollars for the reasons I told you before. But I do own shares in Uzbekistan. I do own shares in China. The Chinese shares I've owned for a few decades now, uh, but not many other countries, not now.
What about U.S. stocks?
I don't own any. I don't think if I do, it's a mistake.
You mentioned Uzbekistan shares. I had never really heard of the Uzbekistan market. I looked it up. It appears to be doing quite well. What was it about the Uzbekistan market that attracted you? And why has the stock market been going up?
Well, Jack, every once in a while I do get it right. I've actually been to Uzbekistan a few times. It's an extraordinary country. You may not remember Tamerlane, but Tamerlane was one of the great world conquerors 500 or 600 years ago. He conquered lots of places. Uzbekistan is not controlled by the Russians anymore. It is a country with lots of natural resources, and they now are starting to run the country the way you and I would run the country. I think they think so. They have lots of resources, natural and man-made, and they're trying to become a successful economic powerhouse again. We will see. I
Hmm.
bought shares hoping they will.
And Jim, what do you make of its neighbor, Kazakhstan? I believe they also have shares.
I don't have shares in Kazakhstan anymore. I have had in the past. Um, Most of the neighbors have become more successful. There's several stands, but Uzbekistan is the only stand where I own shares right now.
Jim, what about the Russian market?
Well, I think I own Russian shares. Who knows? You know, the war came, and we will see. I don't know if everything has been confiscated or blocked or whatever. You can ask me when the war is over. Well, it is strange that the U.S., the land of the free and the home of the brave, the bastion of capitalism, would confiscate other people's assets.
Jim, we talked a lot about mistakes, and I think it's important because it's important for people to try and avoid mistakes. But let's face reality. You have done a lot of things right in your investment career. What have been some of your best investment decisions? And I'm not talking about individual trades. I'm talking about a framework for understanding markets.
Well, probably right now, the best decision I've ever made is to have children. All my life, I was against children. I never wanted to have children. I felt sorry for people who had children. But then a few years ago, I had a daughter, and I realized, oh my God. Now, if I'd had children when I was 25, it would have been a disaster for the child, for the mother, for me. But there comes a time, I guess, in some people's lives, mine anyway, that having children has been an unbelievable success, probably the smartest thing I've done that I can remember in my life. So it was so successful. I had another one. So now I have two. Two then turned out to be very, very smart daughters, very kids. So probably the best decision, the greatest success I have had is having children.
That's wonderful. I'm happy for you, Jim. You mind if I just press you on just strictly within the investment world? What did you do right that other people didn't get? What was the secret of Jim Rogers' success in the investment world?
Well, I mean, in the US, I sold short a lot in the 70s because I thought I could see that the US was going to have serious problems in the economy, in the currency, and in the market. That turned out to be successful. I had longs as well. One of the greatest decisions I ever made early was to invest in successful countries. Now, I can remember once talking to some people on Wall Street in 1969, to be precise. I talked about investing in Denmark. How many of y'all left the room? They said, "What the hell are you talking about, Denmark?" In those days, everybody wanted to invest on the New York Stock Exchange or OTC, over the counter was called then. But for whatever reason, I realized that there were many countries in the world and there were many cheap stocks in the world and cheap markets. And so in the 70s, even the 80s, I was continuing to invest in other markets around the world. I remember once in the 80s, 1980s, believe it or not, I started telling some people I was investing in Germany. They thought, oh my God, what the hell's wrong with you? What are you talking about, Germany? Why would you invest away from the US? I mean, for what it's worth, Germany went on to have a great bull market, a great long term bull market. And then Austria. Oh, I figured, well, if Germany's this good, maybe Austria. Anyway, I learned years ago to invest around the world and not be inhibited that it was not the New York Stock Exchange. And you should too.
Jim, what do you make about India?
Well, I have owned Indian shares at times. At the moment, I don't own any, sadly. I sold everything, and India is now making new all time highs. And to my surprise, nearly always, even when I owned India, I was skeptical of Delhi. The people in Delhi were always, they talked about success, but they didn't really mean it. They didn't really like for people to be successful and make money. But now, for the first time in my life, Delhi wants people to be successful and to make money. The Indian market's making all-time highs. I sold, obviously, but it seems that India is now going to be a successful country again and a successful market again. I'm not there right now, though, because I sold too soon.
That's interesting. Jim, I so appreciate you being a guest on Monetary Matters. You have so much wisdom, and I really appreciate you sharing it with us here today. Thank you.
Well, thank you, Jack. Don't forget, I make many mistakes. Okay. Someday we'll do a program about my mistakes
Yes,
if
yes.
I'm still solvent.
Thanks
Hope
again,
I'm
Jim,
worth it.
and thanks everyone for watching.
I've had a lot of fun. Thank you.
Thank you. Just close the door.